Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to talk about velocity banking again and also talk about escaping the debt matrix. Remember the movie The Matrix from 1999? Remember how good it was? And then they made two unnecessarily unnecessary sequels, and then they made that really unnecessary fourth sequel. Oh, that was so bad. But we're going to talk about The Matrix. In fact, I asked ChatGPT, can you explain velocity banking in the voice of Morpheus? Right? And we'll go ahead and play that before we do the velocity banking review today.
What if I told you that the key to escaping financial bondage has been hidden in plain sight? A system so simple yet so powerful that it turns the very mechanisms of debt against themselves. This is velocity banking. You have been conditioned to believe that debt is a prison, that you must crawl through years of minimum payments, shackled by interest, never truly seeing freedom. But what if I told you there was another way? Instead of using a checking account, you wield a HELOC or a credit line, a tool, a weapon, to leverage cash flow. You funnel your income directly into this line, reducing principal at an accelerated rate, minimizing interest, and then pulling only what you need for expenses. You see, the banks profit when you follow their rules, their amortized schedules. But when you master the cash flow game, when you use their tools against them, you pay off loans in a fraction of the time. Most will not understand. They will remain trapped in the cycle of debt, believing there is no escape. But you now see the code. The question is, will you take control or will you remain a slave to the system? The choice is yours.
All right, let's go ahead and take control. And the biggest challenge with velocity banking is that, some people have said that they've tried to explain it to other people, or they pass on the videos from this channel, and then they just kind of sit there and act like they didn't hear it and then move on. Right? That's what you call, I guess, the blue pill, and then the red pill is actively applying it. In fact, I know someone who bought a car recently, and I don't know what the time frame. I'm sorry, time frame for the debt payoff is, but in 2 months, that person's going to pay off a car completely. No, another person where that person's going to pay off a home in like less than 2 years. Right? Amazing stuff. But most people, and a lot of people say the same thing. It's just like, hey, I explained this to my friends, and they just kind of they act like I didn't even, they didn't want to look at into it, and I'm like, welcome to my world. Alright. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of a line of credit. Okay, so if I go ahead and do take a look at this here, I have good income, I have a lot of expenses, and I have very little left over. Now, why do I have very little left over in savings? It's because I got a lot of debt. And if you take a look at my expense breakdown, you see every single debt that's listed here, and you also see here, these are all the expenses that I have to pay on top of my debt, food, gas, insurance. And our whole goal with velocity banking is to make sure we get rid of the debt and get rid of it in the easiest way possible. Okay, so what we're going to do is assume two things. Number one is we're going to assume we have the same income. Okay, and number two is we're not going to save money. Not gonna save money. So this is a deliberate um, choice on our part, whether we're negative savings or positive savings. Every single month, we're just not gonna save money. If you take a look up here, this is zero, right? This balance is zero, zero. Okay, money comes in, you spit it right back out to the debt product, and in this case, for the most part, it will be a home or a line of credit. And then we're going to have something called cash flow, right? Cash flow, which is kind of similar to the savings in the beginning, but once we move some debt into what we call a line of credit, we're going to increase this. And what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. So you take a look here, and I show this in almost every single video. This is a line of credit. I could click a button on the bank's website, and it'll dump up to $280,000 into my checking account at a 7.5% interest rate. All right, so let's go ahead and do that right here. So 25, 26, 50. And this is what we're going to do. We're going to assume we have access to, yeah, let's say $150,000 line of credit. So think of it as a $150,000 credit card, and we're going to move $101,000 of our credit card debt into the line of credit. 101,000. And so once we do that, we're going to increase our cash flow. And like, what do you mean by that? Well, these payments go away, right? So now these go to 000, and magically we went from $553 to $3,942.06. And so this is what we're going to do. We're going to dump all of our paycheck in, take our expenses out, and then our cash flow will be used to reduce the debt that we have. And we're going to have to obviously pay some interest for using that line of credit, which we'll calculate. So we go from here to here in an instant. Let's see how that's possible. Oh my goodness. 553, 3,942, and we didn't save money. No saving money. Okay. And so, I know a lot of you are thinking, well, how do I get a line of credit? And here's the thing, right? It's kind of like asking, how do you get car insurance? Do you get car insurance after you crash the car or before you crash the car? Well, the answer is before. And it's the same thing with getting lines of credit, right? I have over 580 something thousand dollars lines of credit. And the way that I got it is because I know the secret. You know what the quote secret of banking is? Banks don't lend money to people who need it. And so what happens with a lot of people is that, let's say they're here, right? They make good income, but they don't have that much savings left over, and like, I'm going to try to get a line of credit. I've only known one exception to this, right? Only one exception, but I'm not going to teach it because you need a firm financial foundation. And when you try to get a line of credit at this stage, it's like driving without insurance, and then you crash your car, and then you try to get the insurance. You don't want to do that, right? You want to get the line of credit before you ever need it, because banks don't lend money to people who need it. And people don't listen to this. They just try to be all snarky. So, like, well, that's not real. Listen, none of this, what I do, is realistic, because most people they don't follow directions, right? That's how I paid off my mortgage in 2 years and 9 months, right? That's not realistic either. Never said realistic. Stop using the word realistic. Follow the directions, right? Yeah, I'm a cult leader. You got to follow the cult leader. Okay, so let's go ahead and do this. And this is going to be entire paycheck of $8,500. You put that in there. It does two things. Satisfies the minimum monthly payment, and then you lower the interest because it's based on the average daily balance. And let's go ahead and um, pay off our debt. Okay, let's do that. And then minus 3942.06. And then we're going to go ahead and do this. And then we're going to multiply it by the interest rate, 0.08, and then divide by 12, right? And then I'm going to go ahead and copy and paste this. And you see that the debt gets reduced every single month, right? We reduce the debt. And then wablam, in 29 months, it's all gone. 29 months. Wablam. All right, so in 29 months, we paid off, how much did we pay off? 101K. Okay, we did that. And then now, let's go to our loan calculator. And I'm going to do this. Whoopsie. So what we do with our loan calculator is we just do 29, 29, 29. That's the current month, and it'll tell us the latest balance. And we use this thing called the cash flow index to help figure out which loan to pay off. Now, a lot of people are solely focused on that interest rate, right? The 7%. And why are we not attacking the 7% yet? Is because if we pay off this 11 grand auto loan, we get $386 of cash flow back. But if we pay more than double that, we almost get the same amount of cash flow back. So that's what this cash flow index is for. It's like a ranking system. The formula is the balance divided by the payment, and the lower the number, the more bang for your buck you get when you pay off the loan. So let's go ahead and do that and get almost $400 of cash flow back. Okay. All right, so now it's going to go ahead and do this. So this is going to be plus 11372.53, and then I'm going to do 0 right here. And then now this is going to be 4,000. Yeah. We're going to update our cash flow. That was easy, All right, so now it's 4328.81, and then we're gonna do that. And all right, so now this is done in about 31 months. Okay, so 31 months. And then this is gonna be 101 plus 21 is 122K. And then now we got to go into here, 31 months, 31 months. This is now 0. And so one of the things that I'll talk about the nuances with paying off loans, okay, is that if the loan interest rate is kind of the same or higher, it's okay to move into line of credit. But as you have a bigger a difference or spread between the loan interest rate and the line interest rate, and there's not enough cash flow like a 30-year mortgage, because I pay off 283 grand to get 1200 in my life rather than the 28 versus the 400. You can't move the loan into the line of credit, or you're throwing a lot of money on the table. Okay, if you throw away a little bit of money on the table, sometimes in this society, we pay a little bit more for convenience, like kind of like Instacart, what do you call it? DoorDash, right? You pay a little, actually, you pay a lot more when you use those services. But what I'm saying is this, like, let's say you move this into a line of credit and you just end up paying a little bit more. To me, that's not bothersome. But if you're paying 50 or $100,000 more that when you don't need to, then it's like, ugh, or you know what I mean? Like, so some things to consider is that when you have a loan interest rate that has a difference between 3 and 8, because 8 is the line of credit interest rate, and there's no cash flow, right? When you pay it off, very little, you don't want to move the whole thing into a line of credit. That's like the rule of thumb. But let's move this into the line of credit, this 28,000. I am going to do that right now, which is going to be plus 28150.66. All right. And then this is going to be 0. And then this is going to be 4,735.19. All right, so now $4,735.19. Okay, and then right, so now this is going to be 37 months. So 37 months, which is going to be 122 plus 35. It's going to be 157K. And then in 37 months, wow, in almost a little bit over 3 years, we paid off all our loans. The only thing left is a mortgage. All right. Well, should we invest in real estate? It's up to you, but I feel like, yeah, you know what? I paid off all my debt except for my mortgage into 3 years. Let's go ahead and invest in some real estate. And the number one rule when it comes to investing in real estate is you got to buy it at a discount, right? You see this right here? I bought at the peak of the market, 2022. I think you're an idiot for buying at the peak of the market, but I bought it at a discount, right? And it doesn't matter what the market does, really. Well, it kind of does, but not really. As long as you buy it at a huge discount, and this isn't even huge. This is like newbie discount for me, right? I gotta get it like if the property value is worth 300, I want to get it at 100, right? But if if there's a huge discount, I need to get it, and I got a decent discount, okay? 2022. Yeah, so $300,000 you want to get for 200 on November what in the peak of the market 2022 when real estate was going crazy. And it's 2 acres, very beautiful. Very beautiful. So my point is this, you need to buy a discounted property, and I love doing this because it's like so shocking, right? So let's assume that we buy a property all in for about 200. We'll make it a $250,000 line of credit, but let's say we go all in for $200,000 line of purchase, including repairs, right? And then, okay, and then we're gonna go ahead and do this. We're going to assume we get a tenant for $2,000 a month. Okay, $2,000 a month. Now, rental rates will be dependent on your area because it's gonna be dependent on demand and supply, right? That good old demand and supply, or supply and demand. So let's say it's $2,000 a month, and then we don't assume that we set aside 30% for expenses. That's just a general rule, right? In some instances, insurance may be way too expensive, so you can't even make money, or taxes may be way too expensive, like in Texas. But let's go ahead and do this. We get $2,000 multiplied by 70% because that'll be our is it? Yeah, I think it's gonna be our net income that we're gonna get. All right, so now what we're gonna do is here, this is our cash flow, okay? And we're gonna have a $200,000 balance in the line of credit, and let's go ahead and do this. This is gonna be 6135.19, and let's see how fast we pay that sucker off. And so now it's gonna take us, whoa, just in 3 years to pay off a mortgage or pay off the line of credit to buy the house, right? So so it's gonna be first rental house, and then pay off time, and then how long did it take us to pay it off? 36, 37 months, right? So we'll say 37 months. Let's do it one more time again, boys. Get another rental house for $200,000. That's worth 300. Get another tenant in there, multiply it by 2, right? And then now our cash flow is about $7,500. So it'll be 7535.19. And I'm going to do this. And I'm going to do this. And then we'll see that in 30 months, okay? So second rental house is going to be in 30 months. All right, let's get the third. All right, so we get another 10 in there, multiply it by 3, and then our cash flow. Wait, did I screw up? Multiply by 3, and then our cash flow is 8935.19. All right, so now, all right, 25 months. Okay, so third rental house, 25 months. Beautiful. And then, so what is that, like 37 plus 20, 30 plus 25? That's going to be 92 months in total. So 92 divided by 12, which is going to be 7.67 years. We are going to be debt free on 3 houses. Whoa. Okay. So you know how it takes an average person to pay off a car in like 5 to 7 years? We paid off 3 houses in 7 years. Whoa. Whoa, that's yikes. All right. Well, you know what? We should pay off our personal home right now. So all right, so 37, so 37 plus 30 plus 25, which is going to be 92 months. So it's going to be 37 plus 92. So it's going to be 129. And then now let's focus on paying off our personal home, right? So we just have this Velocity Banking calculator to help us figure everything out. So it's going to be 221,744.57, 221,744.57. All right, so 221,744.57, and then this is gonna be, what's my income? I don't even know. 12,700. Holy balls, 12,700. Living expenses is 2,500, and then we'll just do a 13,000 chunk. Whoop, 1.9 years it's paid off, right? So after 1.9 years, so this is 0, and then now our cash flow is about 10 grand a month in about, well, it took us about 8, No, about 9 years to have 10 grand in cash flow, and again, this is if you're just lazy and you only want 3 rental houses. You see how you don't need, like, 20 rental houses or 100 rental houses leverage to achieve this? Just get 3. 3 and then pay them off, like, every less than 3 years each one, and that's basically the matrix right there broken in front of you, but I wonder if people are actually gonna look at this. Right? I wonder if you actually, like, showed this to your friends would be like, "Whoa, like, you paid off a rental house in 3 years," or just gonna stare at you and pretend like you didn't even do what you did. I mean, it happened to me when, paid off my mortgage in 2 years and 9 months. This one right here, 2 years and 9 months. Okay. Alright, well, that's it for today, folks. This is, Korean Atlanta Mentorship. Have a great day, and I'll see you on next, video.